Today I'm going to show you how to analyze any income statement in a very simple way. By the end of the video, you will be able to understand how companies make money, how they spend it, and how much they actually keep. You will be able to analyze businesses like a real-world investor, helping you making better decisions to improve your future returns in the stock market. Hello investors and welcome to Alpha Learning. Today we're going to take a look at the income statement. This is the first video of the channel, and with this video we're starting a series of 3 different videos. How to read an income statement, a balance sheet, and a cash flow. These documents are important because they tell you the narrative of a company. Is the company making money? Is the company losing money? Do they have enough cash to pay all their debts? And what are they doing with the excess money that they have? Are they investing the money in the company, or is the CEO keeping all the money by himself? So without further ado, we're going to start with the income statement. So to help us understand how to analyze an income statement, we're going to take a look at Apple's income statement. Where can we find this? Well, there's a lot of different websites that you can go to. You have Yahoo Finance, Morningstar, or you can also directly go to the specific company's website and find their 10K report, where you will be able to find their income statement. Fortunately, we have this amazing tool called Alpha Finance, which is going to simplify all of our research. So the first step is going to be typing the name of the specific company we want to take a look at in the search bar. So in this case, Apple. So once we search the company, you will go to the Financials tab, where you can see the 3 different reports that we just talked about. The income statement, the balance sheet, and the cash flow. If you scroll down, at the bottom of the graph, you will find this timeline that will help you choose the range of years that you want to look at the income statement. You will be able to look at more than 10 years of data for any company that you want to search. Let's take a look at the actual income statement of Apple. All the income statements are going to be breakdown as you can see here. The first line is always going to be total revenue. So in this case, we can see that Apple just made almost $400 billion in 2024 of total revenue. What is total revenue? Well, these are basically the sales of the company. In this case, this will involve Apple products such as iPhones, Macs, or even Apple TV. So from all their products, they just sold $391 billion. If we go to the second line, here we can have a look at the cost of revenue. This can also be called COGS or cost of goods sold. These are basically going to be the costs that are directly related to the sale of the product. So let's say, for example, in this case, for Apple, we will be talking about the cost of the battery for the phones, of the cameras. So all the product that's inside the product that it's being sold, that is going to be your cost of goods sold. We're not talking about salaries or anything like that. The direct cost to revenues. In this case, for 2024, we can see that Apple just spent $210 billion in producing their products. So once you subtract the total revenues from the cost of goods sold, you will get what is known as gross profit. So in this case, we can see that Apple in 2024 just made a gross profit of $180 billion. Once we have our gross profit, the third line in the income statement is going to be SG&A. This is short for selling and general administrative costs. These are going to be the costs that involve marketing, wages, and basically all the expenses that are related to the selling of your product. In this case, we can see that Apple just spent $26 billion in 2024. The next expense we have in the income statement is R&D, which is short for research and development. As the name says, research and development are expenses that the company is going to make in order to develop their current products or do research to develop new products. In this case, for Apple, we can suppose that these are expenses that will go for AI research, which is very trending right now, and possibly new iPhones. Here we can see that Apple in 2024 just invested $31 billion in developing and researching for new products. These 2 expenses combined will give us the total operating expense, which is going to be the expenses that the company have to make in order to sell their products or develop them. After summing up these expenses, we can see that Apple just made $57 billion as operating expenses. If we subtract these $57 billion to $180 billion of gross profit, we get the final operating income. This line is very important as it will show us if the company is actually profitable from its operations or not. In this case, we can see that in 2024, Apple made $123 billion. After we had a look at the operating expenses, the company still has some other types of expenses and incomes, which are going to be classified as non-operating income or expenses. Here we can see that in 2024, Apple didn't have any of them, but in other years, they did. It's important to look at them because sometimes a company can have a lot of income from their non-operating income, which will signify that the company is actually making money from another line of business, which is not the one they're supposed to, which is really bad. So what are these non-operating income and expenses? Well, let's say the company invests their money in bonds of the US. They will get a certain return for them. This is what we call non-operating income. What kind of non-operating expense a company can have? This will concern maybe paying their debt. When a company takes debt, they have to pay interest on that. So if we look at the two lines below, we have interest income and interest expense. After we sum this up, we get the net interest income. Here we can see if the company is actually making money from their buying assets and paying their debt or not. And this will go under the non-operating income and expenses. So once we have our operating income and we pay our non-operating expenses and we earn our non-operating income, we get the total pre-tax income, which we can also call earnings before taxes. This is the income that the company is going to get before having to pay the taxes to the government. As we can see, in 2024, Apple had $123 billion of pre-tax income. After this, they paid a corporate tax of $22 billion, which leaves Apple with a total net income of $93 billion. So as we can see, this is the last line of the income statement. After the company pays all their expenses, we will get the total net income. So in 2024, Apple, after selling $391 billion worth of their products and paying all their expenses, they end up having a net income of $93.7 billion. We will now have a look at what I personally think are the single most important lines of the income statement that any investor has to take a look at. First of them, of course, is the first line, the total revenue. We want to see the revenues of the company grow over time. So here, as we can see for Apple, since 2006, they have grown their revenues in a very impressive way. This is what we want to see. If a company has declining revenues, this is probably really bad because, as we just saw, the first line of the income statement is revenues, and if this one is going down, everything is going to go down with it. Revenues is what drives the income statement. So we want to see this growing over time. Second part of the income statement that I think it's really important is the R&D part. Why is this line so important? Well, if a company is not investing in the research and development of their products, they might get behind. For us, it's really important to see a company invested in this line of the income statement. As we can see, Apple has consistently been growing their R&D expenses until the last 12 months with a total expense in research and development of $32 billion. For us, it's important to see this number grow and be important enough so the company can keep up. We're going to take a look at what can happen if a company is not investing in R&D. We're going to talk about Kodak. You may or may not know this company, but this company was actually the leader in the film industry in the 20th century. They controlled more than 90% of the market, but something happened with them and they ended up filing up for bankruptcy. Kodak invented the first digital camera in 1975. So this is the camera. I know it looks old because it is old and it's the first one. But there was a problem. They didn't invest in their R&D line of the income statement. What happened after this? The competition came and just crushed them. As we can see, Sony developed better cameras than Kodak, and Kodak had to file for bankruptcy in 2012. So this is why I say R&D is a very important line in the income statement, and we want to see this line growing over time and being important enough so the company can keep up with the competition. The last line that I think is very important for the income statement is the operating income or loss. So as we just saw, this will tell us if the company is actually being profitable with their operations or not. So of course we want this number to be positive and growing over time. This is the perfect example. As we can see, Apple has consistently been growing. As incredible as it can sound, you have a lot of companies that are not profitable from this line of the income statement. So imagine all the other expenses that they have, such as the interest ones that we just saw, the non-operating expenses. They will of course not be profitable at the end of the income statement in their net income. Now you're able to read an income statement for any company. But we're not done yet. As I said in the start of this video, this is the first video of 3 different videos. In the next video, we'll have a look at the balance sheet, where we will be able to look at the total assets of any company and liabilities. So basically what they have against what they owe. And for the third video, we'll have a look at the cash flow statement, where we will be able to look at what the company is actually doing with their cash. Where is the cash flowing in the company? Congratulations! We can now say that you know how to read an income statement. You're one step closer to being a real-world investor, and I'll see you in the next video when we will learn about balance sheet.